Hey guys, welcome to Anti-Hedge. Today we're going to be talking about Warren Buffett, his recent shopping spree, as well as comments about Bitcoin. If you like this kind of content, you should definitely stay till the end. Like, comment, subscribe, and check out all our other social medias and videos so that way you can stay up to date with everything that's going on in the crypto market while it's happening. Before we continue, I just got to say, this is not financial advice. Don't accept liabilities for the losses that you might incur, and everything here is strictly for news and research purposes. Warren Buffett, legendary investor, claims Bitcoin A does not produce anything, but even if you offered him all the Bitcoin in the world, he would not take it. Well, I mean, that's kind of dumb. For $25, I would take it, and I would just sell it for 30. You know what I mean? But whatever the case may be, we're not going to get too much into the idea of him just bashing it for what it's worth, because I wanted to get more into the substance of why what he says is basically not just hogwash, but rather why he hates it so much. And I might have said this in a previous video, but I'm going to cover it again. It all originates from one thing. He is a whale. He is one of the big whales. This guy controls the stock market. What is the stock market? The stock market is manipulation. The whole concept is manipulating it to leverage more money out of it by messing around with people's emotions. That's what the stock market is in a nutshell. You could go deeper into how to break it down, and I probably will one day in another video. But for simplicity, I'm just gonna explain it as the nutshell. He doesn't like Bitcoin because it's not that he doesn't understand it, because people have said that he doesn't understand Bitcoin, that's why he hates it. Rather, it's the opposite. He understands Bitcoin very well, and that's why he hates it. He'll pretend and he'll feign his ignorance of it, but he understands it very well. Whether or not he's made bad calls with tech stocks because he doesn't understand them, he understands this one very well. Bitcoin and cryptocurrency, transparency, honest money, the concept that is behind it is basically like his lichbane. Basically what kills him and his existence. It's very scary for a guy like him, because how he makes his money is the ability to control the financial system and manipulate it to his whim. Now, that's not going to be as simple when everyone's transparently able to look at your accounts and see where the money's going. It doesn't work so well for Mr. Buffett, and that's why he hates it. That's why him and Munger are two advocates against it. It's not a lack of understanding. Rather, it's a deeper understanding than probably most people actually get from it. The other reason too is that he doesn't control it. Meaning that his hate is the idea of, if he, you know what I mean, like let's say he bought it at $1 or under $1 during, let's say, the Wall Street revolution in 2008, 2009, Occupy Wall Street. Let's say he did buy it. You think he would have the same opinion of it? If you, let's just say, bought 100,000 Bitcoin for $100,000 as a joke, do you really think he would have the same opinion of it? If he bought Ethereum at $7, do you think he would have the same opinion of it? He would not, because the reality is that Ethereum and DeFi, just that alone, is going to probably eliminate half the jobs of his firm. That's something. I don't know what to explain it as, be it profit for the company, or rather the elimination of wasted work. It's something. Bitcoin is transparent, honest money, backed by energy. He can't control these things. He does not own them. He didn't buy into them early, therefore he doesn't want them. And he can't want them. Because now for his firm to go and buy Bitcoin at the current price, even if they are buying it in secret, for him to publicly be a part of Bitcoin now would not only be a grave mistake on his reputation, but also it would basically be like rubbing salt into the wound for his ego, because he missed buying it so cheap simply because he didn't want to buy rat poison square, when the reality is that Wall Street is rat poison square for society. And that's why he hates it. Bitcoin is rat poison for people on Wall Street. They're the rats. Bitcoin is the poison. Kind of fucked up, right? That's my opinion on Buffett's opinion of Bitcoin. So my opinion of his opinion. Now, I guess we're going to break it down a little bit deeper because I wanted to get into the next thing that was very important, right? Minus the fact that he doesn't understand that it's software, but he probably does. I want to go into the next thing that's very important because it's more than just crypto that I want to talk about today with Mr. Buffett. Warren Buffett just went on a huge buying spree. 58 billion total. So he's been sitting on roughly what, 120 to 150 billion dollars of cash the last few years. He hasn't made any major plays. He bought silver, which was a play, and I agree, silver is a good play for a man of his age with, you know, less understanding of where the world's about to go, because he's at the end of his life. You know what I mean? Like, his rope is almost finished, meaning that for him to be making plays 20, 30 years in advance, it's not going to be as easy for him. He just went on a buying spree, and his buying spree basically consists of the things he understands best. And that's basically energy. Energy is where a large part of his money basically went. And he bought basically more shares in Chevron, right? So he bought more Chevron, basically upping its stake from 4.5 billion to 26 billion. So that's a huge increase just from that. He also increased his stake in Activision Blizzard, which is a gaming company. Not something you would expect, but definitely something that's worth talking about. And apparently he's taking it as, quote, an arbitrage bet on the video game maker in the midst of being acquired by Microsoft, which isn't stupid. It's actually a very intelligent play, because if it does get acquired, it's going to affect the company. There will be money to be made there. It's definitely worth considering. The other thing too is that in his flurry of buying things, he bought more of something called Occidental Petroleum Corp. That's something he's been holding for a while, and he upped his shares in that company, as well as Allegheny for 11.6 billion, right? The trend here is that he is buying a lot of energy stocks because there's not going to be a shortage of energy. We need more energy. If anything, there's going to be more energy needed to be consumed. How we're going to consume it is, you know, it beats me how we're going to figure it out, but in a lot of places it's going to be oil. For places that it's not oil, it's going to end up hydro, solar, wind, anything, even nuclear. I wouldn't be surprised if nuclear becomes something that becomes common in energy practices soon because of how clean it is and how much the technology is developed for people to actually be able to use it. It's not like 50 years ago when nuclear reactors were made basically with buttons and like all these weird old technologies that we would not use now. There's different safety procedures involved. The only major issue with nuclear is the waste. That's our major issue. But at this point, just looking plastic and oil and the damage it's doing to us, maybe the nuclear isn't as devastating as we think compared to that, where we're heading. That's one of the most interesting things. He's bought a lot of energy. Just to clarify, Chevron and Occidental Petrol are energy. He's bought a lot of energy. He bought Allegheny Corporation, which is a holding company, which is diversified in many other portfolios. He bought some Activision and Blizzard because of the Microsoft takeover. And the cherry on top is that he's buying back into Berkshire and Hathaway, meaning that he's doing a stock buyback of his own company because he's bullish on where his own value is going to be in the next few years. Definitely a lot of food for thought. It's interesting because you could see he's running out of plays to make. He understands that the company itself will continue to exist long after he doesn't. These are things that he doesn't see going anywhere probably until he's dead. So those were his plays. Smart plays. I'm not going to say they were stupid ones, considering that, you know what, he is Warren Buffett. You know what I mean? He did make Berkshire and Hathaway huge. It's a pretty huge company. Some of the possible reasons that he made these plays is because of this. A lot of people were talking about a stock market correction, which is imminent. And it is. There will be a huge correction. It's about a 50-50 chance of how or when it's going to correct. The reason I say it's 50-50 is because we should correct. The market should technically be cut in half. But the reality is that inflation isn't stopping. And it doesn't look like it's going to stop for a while. So now he's taking a bet that inflation will outpace the correction, and chances are he's going to get one more big rally before the real correction actually happens and sparks some form of global crisis of money. That's my understanding of his play. It isn't just as simple as he's buying stocks. He said a while ago that everything's overvalued and there's going to be a correction. As you can see, even things that are correcting are popping back up because of inflation. So assets do well in inflation, and even if you're betting that there's going to be a correction, sometimes there's just too much inflation for the correction to happen. Because no one's going to sell their stock if their money has no value. There's no point in holding money at that point. At that point, their asset becomes their money. And there's actual real important understanding that people need to get is that money and currency are two different things. I'll do a separate video on that, but in a nutshell, I'll tell you straight. Currency is what we transact in. Money and wealth are things like assets. As crazy as it is to say, it's like your $20 bill only has value because we trust that it has value. If you take away the trust, it is just a piece of paper. It's just a note with a face on it. But your tomato will always be a tomato. You could eat that. It has value. It is an asset. It is money in its own sense. And people don't really necessarily even look at it like that, which is interesting. But the reason your value is going down in the grocery store is because technically the tomato is closer to money than your currency is. Currency and money are different. Gold is money. That is something that it'll always be a brick of gold. And your dollar denomination of what it's worth will always change because it is a brick of gold. That's where dollar strength indexes come into play. And that's where risks, like risk on, risk off assets, all that shit, at the end of the day, even if we go into a risk off environment, we're still dealing with inflation. Inflation isn't just going to stop. Things have to get priced in. We printed 30-40% of the money supply in less than a few years. There's gonna be inflation, whether it's a risk off environment or a risk on. People think that just because you raise an interest rate, it's going to stop inflation right away. No. Inflation is a train off the rails, and it's going to stop when it stops. The only thing raising rates do is it's like putting parachutes behind it. That's all it's really going to do. It'll stop a little bit easier, be faster, but it's still a train off its rails. It's going to wreck whatever the fuck is in front of it. That's it. Where is this going to head? He understands inflation isn't going anywhere, and he understands that the stock market is overinflated. So he's going to make his play based off of inflation, regardless of the stock market being overvalued. And this leads to two results. Him buying at this point is basically saying like he's buying the dip. And buying the dip at that point, it isn't technically even buying the dip, because he's just buying to keep up with where we're about to go. And that's why I think the market, as much as it barely dipped or barely rolled back, is bottomed out for the time being. Because Warren Buffett wouldn't be buying everything if it didn't bottom out. He's the one that decides if things bottom out, or one of the people that decides if things bottom out. And that's a very important thing. Last thing too is he's capitalizing on his assets before the bubble pops. This is basically one of the reasons why this is why I think he doesn't think inflation is over, regardless of raising rates. So that's part of it. And he understands that assets are going to do better than his cash at this point. Even if he's just putting them in the companies that he understands, he knows he knows it's better than leaving it as cash, waiting to be used. The last thing that I wanted to say regarding this is it could be his last play. Now, this could be the beginning of him making his last play and leaving, or this could be the alternative of him buying in, thinking this is the dip, and then he gets rugged. And this could be the first time he gets rugged and pulled out, and then that's the end of Buffett for Berkshire and Hathaway, closing a chapter, very long chapter, of him being a part of that company. I wouldn't be surprised if this is his last play, because if it goes well, he'll probably coast on it, and if he gets rugged and the market continues to plummet and he's buying in on the plummet, he might have just gotten rugged, and that's the beginning of a change, a shift in the era of investing. Now that more or less covers my Buffett video today. I really hope you guys enjoyed. Definitely like, comment, and subscribe if you stayed to the end. It really helps us, especially while we're growing as a channel, trying to become more for you guys. Thank you so much for watching. Take care.